Hi, my name's Sam Spring, President and CEO of Kincora Copper. Kincora is an active explorer and project generator. We've recently just announced our sixth asset level deal, unlocking over potentially $110 million worth of partner funding. Drilling's ramping up, 7,000 metres of partner funded drilling in the last quarter last year. And it's a good opportunity, Matt, to provide an update of our dual strategy of exploration, but doing more deals to create shareholder value.
Well, fantastic. Well, let's start with the business model. Okay, we talked about collaboration and partnerships. Maybe explain with whom, because obviously I think last time we spoke, we focused pretty much on AngloGold Ashanti. But maybe kind of give everyone new just a bit of a backdrop, then we'll pick it up from there.
Yeah, and it's taken a while. As a pivot and sort of capital markets funding strategy generally does. There were 12 months where we weren't drilling, and then we resumed drilling last quarter last year. We had 4 rigs at 3 projects. And this deal that we've announced today is, I guess, an extension of the existing agreement we've got with AngloGold Ashanti, where we're exploring for effectively a new belt, an extension of the Macquarie Arc undercover. And what we've consolidated now is a 100-kilometre strike, up to $100 million earn-in by AngloGold Ashanti. We're drilling at the moment. We're on our 12th hole so far under that first agreement. And we drilled 6 holes before Christmas. And after positive results, we've expanded that. And that program will be expanded again. We're just working through budgets at the moment to include the first earn-in with the new earn-in that we've announced today.
Right, and how does that relationship work in terms of whether it be sort of technology transfer or exploration approach? Do they work as a partnership with you? I know you kind of got a management fee, which is great, but are they directing you or are you working with them?
It's a real partnership and collaboration. We had them out in the field 2 weeks ago looking at the call. Last week we had our quarterly JV meeting to talk about results, budgets, make sure we're on the same plan. As you say, Matt, we're the operator, but it's a true partnership. We get that management fee. So that's the sort of business model that we're looking to apply for some more of our assets. We're trying to sort of tap into this change in market dynamics. Exploration capital is expensive at the moment, so we've gone to this project generator model, looking to get asset level partners in, have dilution at the project level, try and make this a really scalable business where otherwise we'd have to be cutting things back if you were to be funding this at the listed company level. So what we really want to try and achieve is have $10 million of annual budget that we're managing for partners, getting circa a 10% management fee, $1 million worth of cash from income there, covers G&A, trying to have a diversified portfolio of not just AngloGold, but a number of other major mid-tiers, and try and make this scalable. And from there, shareholders don't have to worry about us coming back to market every 18 months. But you've really got leverage to what you're effectively looking for, which is a big new district or a big new discovery, which is what these majors are looking for.
It's what they're looking for, but they're not prepared to kind of build in-house exploration teams as they have done in the past. This is their way of mitigating risk. And I guess for you, as you say, it's your way of mitigating like dilution risk for you. Can we talk about that relationship a little bit more in terms of, you know, the kind of technical reviews? You talk about it being a partnership, genuine partnership, but they're going to be looking for different things. They're going to want to be chasing big. That means big step outs and maybe not those sort of exciting headlines that juniors need to try to be able to put out in the marketplace. Again, how do you kind of balance that out? Or do you not care because they're funding it?
Well, I guess it depends on the different projects. So we've done 2 deals with AngloGold Ashanti. That covers 5 projects. We've got 14 projects in the portfolio. We'll touch on what some of the other assets are and other partners are. But specifically with AngloGold as an example, they were active, as you say, back in this district last commodity cycle. A lot of majors stopped greenfield exploration back under that sort of 2013, 15 period. Headcount got out of control, costs got out of control, they cut things back. What you're seeing now is a lot of, and every major mid-tier's got its slightly different strategy, but as a generalisation, most producers are making good money again. They're looking at growth again. They're looking at rebuilding their portfolios. Say Goldfields, AngloGold Ashanti, they're 2 groups that were active in the porphyry space in New South Wales last commodity cycle before they shut down their greenfields operations. Both of them are resuming going into greenfields exploration, and they've done deals with juniors in this part of the world. And again, not wanting to necessarily do that in-house, but do deals with creditable partners, pay management fees, where they effectively put their foot on the asset. And if you find a 10 million ounce gold discovery or a new district, then everyone's going to do really well for that. And what we're looking for in this northern part of the Junee Narromine Belt, where we've got this relationship with AngloGold Ashanti, is effectively a new district. To put it into perspective, it's the undercover extension of the Macquarie Arc, where you've got 160 million ounce gold equivalent to the south, where it's better explored, where it's subcropping, outcropping. It goes up to the north undercover, and the strike that we've got there is twice the size, to put it into perspective, of the Vicuña district. And Vicuña is obviously this new emerging region at 4,000, 5,000 metres altitude on the border of Argentina and Chile. And I guess if you're one of these majors, would you prefer to be exploring at that height in that jurisdiction, or central western New South Wales undercover? And I guess from the deal structure that we've got with AngloGold Ashanti for this relationship, if we were ultimately successful, it would get us to the point where those 4 discoveries in Vicuña have been post-discovery, pre-development, and those assets now are worth $10 billion. So that sort of carried interest can give shareholders pretty big exposure with a technical partner that's got the balance sheet, the right deal structure, and the right technical capacity to unlock the potential of this part of the belt.
Okay, it's kind of interesting. I kind of think that the large caps or the mid caps are getting a kind of bad rep, because there's a lot of deals happening, a lot of M&A happening. It's kind of mergers of equals where existing ounces are being merged together with existing ounces. And that's the kind of, I guess, the less risky way of growing resource and reserves for the markets. But they are doing a lot down at this level. There's quite a few companies kind of doing, I think, benefiting from something similar to what you're doing here in terms of getting after the exploration as well. So I'm interested in what do they kind of bring to the table apart from money, more in terms of the intelligence, the technology, and that kind of focus. So how big is the team that you're working with over at Anglo?
Well, there's key people that you're working with day in, day out, but then there's different specialities within the group, and they've got access to the right consultants, the right expertise. They bring that to the table. They bring different ideas to the table that we might not necessarily. And say, for example, we drilled our first 6 holes late last year at Ningen, hit the right rocks, provided proof of concept. One thing that AngloGold suggested to us was, how about doing some ground gravity? And we did that survey early in the year. We've got a whole heap of new targets that will come out of that, and we're just going through the prioritisation of drilling that. And that will upscale this project, and there's a number of things that have popped out of that. And part of that learning also is that they've got a earning agreement for another explorer within this part of the world called Inflection Resources, AUCU on the CSE. They've been exploring with them since the third quarter 2023. We just started last quarter last year. They've already invested over $12.5 million with Inflection in those earning deals. And again, how do you drill through the cover? What geophysical techniques work? They've already learned that firsthand with that partner there within this belt, let alone on a more global scale.
Okay, and again, how do they help you improve the likelihood of finding things? Because I think we've talked in the past about the ambient noise tomography. Are you finding that working? Is that something that you would have used without them on board?
Well, it's interesting. Ambient noise tomography, ANT, which is a passive seismic. We, at our Ningen project, which is where we're drilling with AngloGold Ashanti, actually had Fleet Space, which is one of the leading groups rolling out this new technology, using it for porphyries in a way that hasn't been used before. They came to us, and one of the sort of deals that we've done before we did the agreement with AngloGold Ashanti was their first ever ANT with ground gravity survey at Ningen. We've drilled now 3 holes into that survey area. We've learnt from that. We've actually partnered up with Fleet Space on another project. So far, this is our 6th earning deal. Fleet Space is with Wongarbin. Wongarbin we picked up last year. We did a deal with Fleet Space because they did a similar sort of survey at the Boda Kaiser projects that are owned by Alkane, and it's a good discovery, 15 million ounce gold equivalent. And our whole thesis for Wongarbin was it's a covered part of the Macquarie Arc. We think some of the cross structures that go through Boda Kaiser continue into Wongarbin, and that Fleet Space survey helped support that. So again, trying to do innovative deals with sensible partners. Fleet Space isn't necessarily the most obvious partner for an earn-in project, but they raised $150 million in December last year. They've invested a lot of money into this belt. They've got a lot of proprietary information. And when we're looking at Wongarbin that's never been drilled and it could be a new complex, they brought something to the table that we didn't have. They've got that knowledge that they've built up specifically at the adjacent analog that they're looking to do. And the same sort of story will come through when you look at some of these other asset level partners, like say Earth AI. It's a private AI group, machine learning group. They've drilled 5 holes to date. They're just doing a geophysical survey at the moment. They raised $20 million in January, so they're well funded as well. They're earning into our Condumble project, which is another porphyry project in New South Wales. And when I say earning into, we retain 100% of that project. They only earn into an NSR or royalty if they make a new discovery. So they're bringing their tech, they're putting their capital at risk, and they only get something if they make a new discovery. So these are the sort of innovative deals that we're doing across the portfolio, because having 14 projects, if they're just sitting there, isn't adding value to shareholders. We want to be systematically advancing them. Some of these deals that we've done today have really focused on our earlier stage non-core projects. We've got 3 more advanced projects that are sitting in existing mineral systems proximal to world-class mines. They're the assets that we're starting to sort of look to do deals with now, which in theory should be worth more. And you look at last time we spoke, Matt, we had done 5 deals for 60 million of partner funding. Now we're up to 6 deals, 110 million partner funding. We want to try and get up to $200 million plus, and then that sort of metrics of 10 million a year of partner funded money going into the ground. We get a management fee. You can see how this is a scalable business model with a diverse range of projects and a diverse stage of projects. Some of those will be earlier stage, some of those will be more advanced. And then you're getting consistent news flow to the market.
Yeah, so I think it's good to kind of de-risk the dilution component of how you build a business for sure. And just sticking with the technology side of things and the AI, you referenced Earth AI there on the Condumble project. How effective is this? I'm just broadly, these new technologies. How effective are they for you? Is it measurable yet? Are you seeing any increase in likelihood of finding what you're chasing as a result of using these? I mean, the fact that Earth AI has said, well, like I said, we'll earn in for an NSR rather than a percentage of the project suggests that even they aren't quite sure yet. They've got a lot of proving to do, so which helps you negotiate a better deal, but at the end of the day, you want this stuff to work, don't you?
Oh, you do. And the best way to see what are the new technologies that do work and don't work is to be trying them and trying them with partners, putting their capital to work. So you've got alignment for our shareholders with their shareholders. And that's where some of these innovative deal structures are coming through. And say, for example, that analog of Wongarbin, it's a high priority target that my technical director, John Holliday, was looking to drill back in 1996. Then he got onto Cadia Ridgeway and Cadia Far East, and Wongarbin sat there, never been drilled. And that's one where you can bring in this new technology, but until you actually drill a hole, you're not going to answer that 30-year question of, is this potentially a new major intrusive complex? And it's trying to have the right partners that will not see you through just that first phase of target definition, but drilling, but see you through to actually add meaningful value. And that's where across this 14 project portfolio, we're trying to find the right partners with the right, I guess, business interests so that we're aligned, so that we can go the course of the journey, because it's not a sprint, it's really a marathon at this discovery phase.
Right, okay. And then, so I think hopefully people understand the model better. It's a sort of tricky market at the moment for raising capital anyway. So do you feel slightly protected in that sense from the sentiment in the marketplace at the moment? Obviously, the recent tariffs has kind of beaten the market up real good. It doesn't make much sense, but it's certainly with gold and silver projects. But it's happened with these partnerships, with these collaborations, with other people spending their money on your projects. Better to have a piece of something rather than all of nothing. I get it. Are you worried about the share price at the moment?
Well, I think every CEO should be worried about their share price. And I think the key thing is with this deal that we're announcing today with AngloGold, this second earning deal, it hopefully provides more scale to what our business model is. And we're getting to that sort of, people can see it's not a pipe dream, this $10 million a year of sort of partner funding, that management fee, being self-funding, having a diverse portfolio of multiple projects. That, even in a good market, is something that's important. When you're in a difficult market, making that dollar last longer, more meters that you get from that going in the ground, the better. But ultimately, as an explorer, dilution is what really is front and center in bad markets and expensive cost of capital. If you can get to a self-funding business model where you've got really significant money going into the ground and you start getting some good hits, that gives you a huge amount of leverage. And you're seeing that project generator model in the porphyry space doing quite well. I mean, Inflection Resources, same partner, projects literally in the same belt, chasing the same targets with the same technology, same exploration approach. They're 3-4x our current market cap. What we'd be saying is they're 12 months, 18 months ahead, and they've had $12.5 million worth of Anglo money going in the ground. We've had 1.5 up until December late last year. So again, there's roadmaps for how we can create value and get our share price going the right way. But again, it's trying to execute on our business model, show that it's scalable, get money into the ground, and start getting drill results out. Only fourth quarter last year did we resume drilling after a 12-month hiatus, and you saw 7,000 meters of drilling that was funded by our partners. Those results are only going to keep coming to market, that news flow ramping up, and you're not just living and breathing by the next drill results. You're also hopefully having some significant catalysts from further deals.
Well, how do you scale all of this? Because you've kind of got an increasing part of your portfolio under some kind of management, some sort of agreement, right? But it's going to require, the more you do, it's going to require more people. It's going to require exploration management resources. Overheads may creep up a bit as well. Being someone else's outsourced exploration potential and then buying into your portfolio is great. But at some point, you kind of reach saturation. And it's like, I don't know if we can handle more. Can you?
Well, we can. We're not talking seasonality where you're up in, say, the Vicuña district where you've got a short field season. Central West New South Wales, you've got very good infrastructure. You've got a mining culture. You've got good resources there. You can drill all year round. You have to manage landowners. You have to manage permitting. But that's, again, just planning. And one of the key things that we're going through from these due diligence processes of our partners is, would they trust us to run that operation and have their brand associated with us? And we've drilled over 30,000 metres in New South Wales without many issues. We've gone through COVID, we've gone through flooding, we've gone through mice plagues. We've been able to prove ourselves as a reliable partner and with a very strong technical team. John Holliday is one of the foremost figures in this part of the world. Peter Lehman's been involved with multiple big copper gold discoveries. We've got a well-credentialed board, and that board is aligned with our partners by being meaningful shareholders. So, it's a natural question, Matt. Sub 10 million market cap, how scalable can this be? But have a look at AMARC, which has got 2 porphyry earn-in deals in the Golden Triangle. It's had some good results. It's got Boliden and Freeport with up to $200 million worth of earnings. It's a really good roadmap, and that's I think plus 130 million market cap today. After having some okay results, they haven't quite got to that drill out phase, but they've had some good encouragement. Again, that's what this project generator type model can achieve if you've got the right team with the right partners and the right projects.
Right, but there's So we're intrigued by this bit where you pointed out you're a small company at the moment, and it goes from position of buyer's market to seller's market, and you've got to work out when that moment is where you can retain more control in some of those JV conversations, right? Where you say, well, I've got to work out which deals I want to JV and have earnings on, because we're desperate. We need anything to just stay alive, through to possibly where you are now, where you kind of got the G&A kind of covered, and you can maybe debate which assets you want to retain 100% ownership of, and which you want to maybe partner up with someone. What are the variables for you which say that tell you you're in a bit more control in terms of the timing and the need and the price and the cost of doing those deals?
Yeah, and that's a really good question. And again, it comes to what's your cost of capital and what's your market cap as well. Say, for example, our Trundle project, we've invested over $10 million worth of our own shareholders' capital that we've raised at the listed company level. We're not going to go out there and do a cheap deal for Trundle. We know it's got existing large mineral systems. We think it's a big part of the North Parkes intrusive complex, which is the second biggest porphyry mine in Australia that Evolution bought off CMOC about 18 months ago. And those sort of projects, the same with Fairholme. It's a long strike from Cal, which is Evolution Mining's flagship mine. Those sort of projects, we haven't gone off and rushed to do deals with. There's various different groups that have shown interest, been out to site, past technical DD, past management DD of us being operators. You want to do the right deal. You want to find the right partner, and doing these earlier stage non-core, in some instance, deals has been able to give us the runway to then be a little bit pickier with assets that we think have got more inherent value because they're somewhat de-risked, or we know there's existing mineral systems there. And say, for example, our last drilling program we did at Trundle, we put $1 million into that project. We had good results. That project really needs that next 5, 10,000, 15,000 litres of drilling, finding the right partner that sees that potential and is willing to unlock that with us in a scenario that's effectively a good deal for both parties.
Right. Okay. So Trundle and what's it? Condoblin?
Oh, Condoblin. Yep. That's another project.
Yeah. So, but then you say, I think you said to me last time round, you said that those are probably the high priority ones, Trundle and Condoblin, are the kind of high priority ones. But what you're saying now is you've perhaps got a bit more time to do the right deal with the right partner at the right price.
Well, I think doing this most recent deal that we've second agreement with AngloGold Ashanti, that gives us a pretty extensive work program. Further details I'd expect to come out in a standalone release in due course that shows just how far into the new year we've got and what that means in terms of management fees and covering G&A. But the reality from that is it gives us a strong pipeline of news flow for the near term. And if we were to do another deal for Trundle or for Fairholme, which means that we're gearing up to do more drilling, that is a great problem to have, because we'd be more than achieving that sort of 10 million a year of money in the ground that we're managing for our partners. And that's excluding the Fleet Space deal, the Earth AI deal, the Mongolian asset transactions. That's just projects that we'd be looking to manage ourselves.
Right. Okay. And again, sticking with this kind of control thing, because it's an interesting one, Sam, in the sense that, I've spoken to a lot of exploration companies in the last, 12 months who have been in a sort of state of desperation, and retaining some level of control is really, really important, certainly with decision making, the type of decisions you make. So do you feel now you're not in a rush to divest projects as you might have been, and that you maybe given the kind of further exploration that they're due, or do you feel that kind of market conditions are still making those sorts of decisions for you?
I think without a shadow of a doubt, if we hadn't have pivoted our funding model to the project generator structure, we would have been cutting projects. We would have been really sort of finding it quite difficult. What we were able to do in 2024 was pick up 3 new projects: counter-cyclical growth, opportunistic pegging ground, doing what juniors do best. Now, off the back of this expanded agreement with AGA, we've found homes for 3 of those 4 projects. We've found partners. We've been able to monetize those. Are there other opportunities out there for us to pick up more ground? Maybe, if they fall our way and we think we can add value to them, absolutely. But I guess having this change in model has not only enabled us to grow, but it's been able to provide us more flexibility of how do we prioritize and what do we think the value of these assets are versus the types of deals that maybe have been put on the table and we haven't pushed forward with, and just try to get that right deal with the right partner. And again, try to retain these assets that we think are more valuable until we've got that right deal structure.
Well, I think that's such an important point to make, and probably worth just sticking with for a second, because again, my conversations across the market, across multiple exchanges and multiple jurisdictions, is you can sort of get a sense of the quality of the projects by the quality of the partners that are chosen, right? You know, when I see sort of 2 small companies kind of coming together, it kind of worries me. It's sort of the last actions of desperate people. So the quality of your partner profiles is important. The other thing is important is just trying to understand your exit options, not your strategy, but your options left on the table. Because sometimes these kind of large partners can go on for quite some time at their own pace, and that leaves you slightly out of control. In terms of the terms of the agreement or the milestones that you've agreed, how do you kind of retain that control in terms of, you know, maybe able to kind of create an exit for yourself, financial exit for yourself?
Yeah, I mean, I guess to address maybe one of the points of jurisdiction, we've seen within this region of the porphyry space in New South Wales, $16 billion worth of M&A. You've had Cadia go, you've had North Parks go, you've had now $385 million worth of earning deals with juniors, with majors coming in, whether that's Goldfields, Newmont, AngloGold Ashanti, obviously. Evolution's active in the region. They've made a 10 million ounce gold equivalent discovery at Cal. You've had Bow to be a 10 million ounce gold equivalent discovery. So there's a lot of eyes and BD teams from copper, gold, diversified majors looking at having a strategy for these areas in New South Wales. How do we mitigate our risk in these agreements where you've got certain milestones, you've got certain cash obligations, there's minimum spends, but ultimately the best way to have a risk mitigation process is having multiple partners, multiple projects, and diversifying. And that's what, again, we're trying to achieve. Is we've done a couple of good deals with AngloGold Ashanti. We've done a couple of good deals with these new tech companies that are increasingly allocating capital into the space, like FleetSpace, FAI. But we also want to do deals with some other new groups and have the likes of Trundle, Gemmelong, Fairhome being worked up by other partners that we haven't mentioned in this conversation yet. And then you've diversified that on a project level, but also a partner level. What's your exit strategy? Well, ultimately, if you make a big discovery, the majors, whether it's a new district or a new 10 million ounce gold discovery, the majors got your foot on you. And at some point, it's that usual trade-off of, if it's good enough at the opportune time, they'll probably provide you the natural exit.
And how do you view leverage on a story like this? Because you're protecting yourself in terms of not having to go out to market and dilute the purchases out of your shareholders. But it feels like a slower, steadier return profile with maybe the option of some inflection points, as your partners maybe, you find stuff. But what type of investor should be looking at this? How do you just describe them?
Well, I think the catalyst here is doing deals. So you've got a special situation event of, we do further deals. We go from 110 to say 200 million of total partner funding. That's a value catalyst in its own right. But the ultimate leverage is from discovery. And again, it's a numbers game. The more drills you have turning it, the more targets, the better. But as we've seen with similar earn-out deals and deal structures, and in our presentation, we've got a few, I guess, success stories historically and more recent success stories in the porphyry space with the project generator model. But probably the most well-known recent copper gold story would be Greatland Gold. And did that ever turn into a tier one gold asset? Well, it's still being worked up, but it didn't hit that in that immediate near term. But that project was a 20x. It went from a 50 million market cap to a $1.5 billion during that earning phase when Newcrest was drilling and getting good results. And again, that provides ample liquidity and an opportunity for shareholders to get into the story and make a multiple return, whether it becomes a mine or not. Ultimately, as insiders, you only get that result once you get an exit. But again, this project generator model, if you find what you're looking for, it's a pretty natural exit for, in a lot of cases, for what the major will want.
But how do you put metrics on that? I'm sort of interested in internally, what metrics do you employ to assess not whether things are going well on the ground with each of the projects, but as a business model, for your company, for your shareholders, this is working, this is not working, because it's a relatively new model for you, right? Which kind of was born out of necessity, given the markets were, crummy. You've got to be able to measure that. You've got to be able to assess that. You've got to be able to have an honest conversation at board level and say, this is working, this is not working. So can you talk about the sorts of metrics, the sorts of conversations you're having on that front?
Well, I guess that metric that we've come out in this release of saying we want $10 million worth of partner funding on a per annum basis that we're getting a management fee for, that gives us a self-sustaining model and have a diversified partner portfolio. That's our, I guess, most visible.
So we can judge you on that. We can judge you on that.
And we're not there yet. That's for sure. But I think achieving that objective will see us, and there's something that we're aiming for to be able to deliver this year, will see us being a pretty meaningful market cap. Again, inflections 4 to 5x our market cap off the back of having the same targets, the same partner in the same belt, applying the same technology. We've just got to work through and keep getting this story and getting this business model understood. And speaking to the right investors, as you said before, Matt, who are the investors that would like this? Well, any shareholder that wants to play in the exploration space, that can see projects being somewhat de-risked by having technical partners who are putting their money in there where their mouth is aligned beside you, and not having that significant dilution, and every dollar that goes in the ground goes a lot further with us because we've got that management fee model. That sort of scenario, I think, is pretty attractive. But in terms of one of the obvious elephants in the room is, okay, Sam, you did this deal last year in May with AngloGold Ashanti. You were trading 6.5. Why are you today down in the 2s? And we have had a major shareholder offload a significant amount of shares in the market, and there's significant shareholder notices out there. We're working through that and almost at that back end of seeing that shareholder come out. And quite often what I've seen with other scenarios where you've had an overhang is that overhang goes and you have a pop. And I think we're at that scenario where this deal is a pretty interesting catalyst in terms of where that selling is hopefully driving it to as well.
Okay, you got that before me. Okay, and that significant shareholder presumably doesn't agree with your new business model, or have they got pressures of their own?
I think they've been a good long-term shareholder for a period of time, but they probably were never expecting to be on the register this long.
Okay. Individual or corporate?
And overseas hedge fund.
Right. Okay. So we benefit. I've kind of steered well away from the actual projects themselves, accidentally. So maybe give us those sort of moments that we should be looking. What are you doing at the projects, and what are the kind of sort of news stories that will be coming out of them this year, 2025?
Yeah, and I guess we'll have an updated corporate deck which will provide a good overview of all the catalysts, all the project. There's plenty of things up on the website. We just had our audited annual accounts out in the last 2 weeks, which provides a really detailed overview. But in summary, Nyngan, we're drilling at the moment on hole 12 with the AngloGold Ashanti Scout program. There'll be further news in terms of what are we looking to do with that project, having done some ground gravity survey and the results of that looking really good. Obviously, this new agreement, we've now expanded this to include 3 other projects. We think Nevertire South is the best geological target in the covered extensions of the Southern Gobi. We think it's a real standout and itching to get down there and start drilling. So we're very excited about what that'll yield. Then we've got our partner-funded projects. As mentioned, Earth AI, they've drilled 5 holes. They've just done a geophysical survey. Results for that should come out. We'll make some progress in the near term with fleet space at Wongarban. In Mongolia, we've got OB1 or Minko that is already been out in the field post the winter. They did some drilling late last year, got some encouraging results, and looking to come out and start drilling pretty soon, given the field season's opening up. But the other thing that I think is a unique selling point for us, Matt, is this is deal number 6. Trundle, Fairholme, Geelong are known mineral systems, and their assets that we're in conversations with other partners for. And I think that's another opportunity to see us achieve that objective of 10 million ounces, $10 million of partner-funded drilling going in the ground, and that sort of self-funding business model and diversified partner model being executed and realised.
Okay. Well, tough markets out there, but you've set yourself up in a good position, defensible position. I look forward to seeing what comes out of these drilling campaigns that you're delivering, and we'll see you soon, Sam. Thank you.
Pleasure, Matt. Thank you for the opportunity.